Many people think RSI is just an ordinary tool. Get ready, because in the next few minutes, you're going to learn about one of the market's most powerful tools in a way you'll never forget. Hello, I'm Farhad Vatan, a financial market analyst. If you're looking for a dry theoretical lesson, this video isn't for you. Here, everything is real, practical, and 100% focused on traders. Let's get right to it. RSI is the Relative Strength Index, or indicator. The truth is, RSI isn't just a number, it's a warning signal, a sign that tells you whether buyers are losing their strength or are just starting to enter the market. This means you can anticipate the next major move just before it happens. The default setting for the RSI indicator is 14, which is commonly used. But if you want to work on lower time frames, you can set this number as low as 7. And for longer time frames, you can use a setting from 21 to 28 to filter out this noise. When the RSI value goes above 70 into the overbought zone, many people think it's a sell signal. Well, that's a complete mistake. In strong trends, I repeat, in strong trends, an RSI above 70 means the market is on fire. It means the pump is just getting started. Below 30 can sometimes mean a crash, and other times it's a golden opportunity. It all depends on the behavior of the trend. When the Relative Strength Index, or RSI, manages to get above 60, it's signaling you to get ready for a potential move. That's the point where the professional traders, often called the pros, are getting in, and the main upward wave is just beginning to form. The price makes a new high, but the RSI doesn't, which is a classic sign of divergence and can be an important signal to watch for in your trading strategy. This is a red flag. It means something is happening behind the scenes and the market is running out of steam. There are two important factors that, when combined, can truly turn a trade into a masterpiece. That combination is RSI and price action. When you're at a key level and the RSI shows that the buying or selling power is weakening, that's exactly the golden opportunity for a trade. In this video, we'll teach you how to use the RSI and its key points. And we'll also carefully teach you how to draw trend lines directly on the RSI itself, which can actually provide you with some very good, reliable entry points. All right, let's go to the chart, and I'll show you everything we've talked about right on the chart. As you can clearly see in the image, the Relative Strength Index, which is also known as the RSI, at the bottom of the screen is displayed as a moving line. When the price of an asset follows a trend line, such as this downward trend line, after a breakout and a pullback, it typically moves upward. This is an important part of our ongoing price action discussion. I will teach you more about price action and show you how to accurately and properly draw these lines in a separate, dedicated video. You see, when we've carefully drawn the downtrend line on the price chart, we can draw the very same trend line on the RSI as well. After the RSI's downtrend line breaks and pulls back to it, we can enter the market. Notice, before the price's downtrend line breaks, the RSI has already given us a buy signal. See, with the breakout and pullback at this point, it's given us a buy signal. Let me give you another example. In an uptrend, which means the price is generally moving higher over time, we can also draw a trend line for its RSI, or Relative Strength Index. Drawing a trend line on the RSI during an uptrend can help us see if the momentum is supporting the price increase. Take a look at this. Whenever the price has touched or interacted with its trend line, you should also draw the RSI's trend line in those same corresponding areas. After the break, notice that the RSI broke its trend line before the price trend line did. This confirms an entry for a sell position. Here's another example. After the RSI trend line broke, we entered at the price breakout point. If you look at the market as a whole, the market is absolutely full of signals that we can get by breaking the Diamond RSI line. Look, it is truly very beautiful. Well, here it is. Using the Diamond RSI line, in our region, we have a trend that is created in our prices. And what does it mean? You see, when a bearish trend line has formed a low at the end of the line in that range, the new low is lower than the previous low. But if we look at the chart, the new low is actually positioned above the previous low. It is supposed to be like this. Ideally, it should be lower, but in this case, it is higher. This situation means there is divergence. This indicates a buy signal during downtrends. Right? You know what I mean, right? Do you agree with what I just said? Does that make sense to you? Let me give you another example, for instance. See, right here we have a trend line. We observe that we have two lows at exactly the same level, but in the RSI indicator, we clearly do not have this same level. The new low of the RS is higher. The RS bottom is higher than the previous RS bottom. This means divergence, which means it can give a very good buy signal. So we have a trend line which, when broken and the money is back, is a violation and divergence that occurred at the price bottom, and we can use this to re-establish the trend line. Also, kill the RSI to enter into a deal with failure and a comeback. So when you see the price of an asset making lower lows and at the same time the RSI, which stands for Relative Strength Index, is making higher lows, we call this a positive bias. In Saudi trends, when the price is making higher lows while the RSI is making lower highs, this is referred to as a negative bias. Look at Bitcoin. We have a trend line with unequal lows. You can see that this low is lower than this low, but the RSI is higher than the Saudi Arabian one. In an uptrend, let me demonstrate for a moment something interesting on Bitcoin's monthly analysis. Look. We had this same kind of divergence showing up on the monthly time frame for Bitcoin as well. There was a higher high in the price, but the RSI indicator made a lower high, and that usually means a drop is coming. Look here. A strong, noticeable red candle appeared together with the divergence. Likewise, the RSI's uptrend line was broken, followed by a pullback and then the drop. On another asset, for example, Ethereum, on its 4-hour time frame, we again had an uptrend line. With the break of the uptrend line, we got confirmation for a sell signal and the divergence that we see between the RSI and the price highs. In future videos, we will have tutorials on price action strategies and how to correctly and properly draw trend lines on the price chart, more as well as the support and resistance lines that we can draw correctly and properly on the price. If you like this type of tutorial, be sure to like and subscribe to our channel so that you'll always be among the very first to receive and view our latest and most up-to-date analyses as well as tutorials. Until the next video, stay profitable.